Hello and welcome everyone to the weekly Delphian meeting. Today's agenda, so we'll go through the market update, I'll do that. And then Shawn's gonna go through and do some earnings analysis. I think he's gonna specifically target some of the bulk crush type trades. So that's what's on the agenda for today. So let's get started. All right, so overall with the market, not much change. We still have everything in ones except for the Russell that went into 4. So we'll analyze each one of those. Overall, for market breadth, we've had a decrease, from week. So, the overall number in bullish states has decreased, down to 44, not a huge drop. And the state ones are, below our threshold of 45. So not overbought anymore. Sorry, someone's noise here. So let's get into the market pulse here. So we look at percentages. So, we're at 41. We've had a 41% for state ones, and then we dropped down to 35. It's kind of rebounded a little bit. What I would say is concerning overall is if you look at the state eights, they've just been building and building. Not really a drop off, a very slow increase over time. So I would say that is a bit concerning. From 9 to 23, and doesn't seem like it's turning around. So I think at some point this will flip over where the 8 over the ones, but who knows when that's going to be. We did have this drop, but the market, at least SPY, SPX, we had this drop in state ones, and it's still in an increase of state eights, and the market still made new all-time highs. If that's not kind of a little wonky to everyone, then I don't know what is. So we had a big drop. We had a little drop in SPY, but it really rebounded. And made those new highs there. So
recording in progress.
All right. I gotta mute you. All right. Couple of people. So I'm being recorded by someone and probably NSA. Who knows? So overall, we haven't really made new highs. And the state ones kind of bouncing around, well off that low of 25%, drove really high. But this kind of thing I'm a little concerned about, that state eights. So we have to keep our eye on that. They just keep climbing and climbing. As far as the new lows, we had a nice, really good bounce, and then right back to flatline 77. So another head fake. And I think what we really, trying to put everything together, looking at the state ones, state eights, the new lows, and then our 50-day SMA. So obviously the 50-day SMA has been our gold standard for this whole run. So I think we still need to really keep an eye on these, but really the 50 days just kind of telling us where things are going. So so that's the market pulse there. We can take a quick glance at the bullish, bearish overall. So we had a crossover, but market still goes higher, pretty crazy. So as far as SPY, but that's driven by the big names. So overall, the Russell and things like that are a little different, but still kind of interesting. Sorry. Got something in my throat there. But if we get down to this level, that's definitely where the bullish stocks are down in the 20s. That's definitely an oversold type of condition. So we're not down there. We're not overbought. We're kind of in the middle here right now. So looking for a little market direction. So let's take a look at SPX. The gift that keeps on giving, made new highs today, I believe. So, keeps running. This doesn't really give us information. What does give us good information is 50-day SMA. So we got near it Thursday. Our last meeting, we were looking right here. So didn't really get at it, but fairly close, and then bounce off like usual. So I say play it until it doesn't work. As far as that 50-day SMA, I'd say this is what you really want to focus on. As we see any drops in the market, you kind of want to, okay, where's the 50-day SMA? We just get these little turns down and then it bounces up. So until that fails, this rally is going to keep on going. I think that's kind of the most important thing that you guys need to be focusing on. So let's look at NDX. So, this had a really strong fight here at the target 3 level, bouncing back and forth, and then really, solidified that this target 3 is now support for this run. Back there on Thursday, got right at it and this exploded off. So that really took off. So this is pretty much at the point where this is getting not very useful as far as the chart, just because it's run well above that target 3 at this point. So not much I would glean off of this other than that target 3 is very important support at this point for that. And then the Russell, so that one's in state 4. So everything else is running high. Market breadth wise, this one is struggling, right? And we had talked about the range for this one for a long time. Since February, this thing's been pretty much sideways, exactly sideways in the channel. So seeing which way this breaks out of the channel, that would be another thing I'd be kind of monitoring. It's not that close to the lows there. Let's see kind of what that is, 2085. So we're almost 50 points off of that, 20, 40 points there. So still not that close to that, breaking out of that channel. And when it got down near that range, it bounced off pretty strong. So as far as the modeling, this could be resistance for we get up into these stop losses. So it turned out a little bit and then bounced off. So I just kind of watch those. Might should be decent resistance for the Russell, but until it breaks us out of this channel, I would just expect this thing to keep going sideways. And we talked about that for a while. So it continues. So that's the overall market. I'd say what's big coming up is tomorrow, I believe, is Jackson Hole virtual. So unfortunately, all those bankers and stuff, they don't get to go out there the Jackson Hole and have fun. So they get to do it virtually like we're doing here. So that actually makes me feel good. So but whatever the comes out of there, could definitely move the markets. The Fed is obviously key. It doesn't make a ton of sense where we're getting a lot of inflation. Earnings are going up. I think I saw an article where Q3 earnings are supposed to drop year over year type stuff. So something to be looking out for. Third quarter could be ugly. And if the Fed really starts, and we talked about this quite a while ago and just kind of throughout, I mean, if they even hint at, tapering, raising rates, things like that, the market is not going to like that at all. So that's what I'd be looking out for in the next few days here. See what comes out of there. Even, if they're starting to hint at it. I've seen a little messaging from, the other bankers. They like to kind of lead it with, kind of test it out there in the media and see what the reaction is. So, but I'm not anticipating much coming out of this meeting, as far as like a rate move or anything like that. That'd be a total shock to everyone. But, I'd just say they may start pushing the language and expectations of things moving up, depending on how the inflation, if that's, transitory or not. It doesn't feel like it's transitory to me. So, so that's kind of the overall market. Obviously 50-day, just keep tracking that. And, I'll open it up to questions or comments to anyone. Nobody? All right. Well, I see Dave's not on here. He always has a market comment. But, anyone else?
Hey, Josh.
Hey, Joe.
Yeah, I just, as you say, with regards to Jackson Hole, it seemed like they, put out that trial balloon last week. The market sold off aggressively and then bounced right back. So
Right.
I would concur with you that, wouldn't expect much out of this meeting.
Yeah, I mean, it would be a big shock. I've been following a little news too, like I told you guys this morning, but, the guy from The Big Short, like he's pretty aggressive on the bearish side right now. And, he was made famous by shorting the housing market through, these complex instruments through the banks that, none of us had access to. But, he was really early on that call, and, maybe he's early, but right now he's shorting like TLT. So that's the 20-year ETF, 20 plus year maturity ETF. We bought a bunch of puts for that. So, so that bet basically is saying that rates are going to rise. And, if rates rise, the longest maturities drop the most. They get hammered. So, so that's one of his bets. And the other one I think that I read about was the ARC, whoever that, Kathy Wood. I guess she's kind of, got her 5 minutes of fame here. He's short that too, which is like Tesla and, basket of very momentum, high PE type things. So just a couple of news items I read. I like to follow that guy. He seems pretty smart, but his timing's not perfect. I'll say that. So anyway, yeah, Jody, do you have anything else?
No, just The Big Short's my all-time favorite stock market movie, for sure. I mean, Markets movie. I thought they did a wonderful job depicting the mindset of a trader, which you seldom see in those glorified, Wall Street movies. Yeah,
there was another, like Margin Call was pretty good. Obviously, from the 80s, you had, what was that one with Michael Douglas?
That was, that movie, which to me was total garbage. That came out in October of '87. Yeah. And, that was obviously when we had the crash. But that's the more typical, just sensationalized everybody on Wall Street's a drug addict versus, what I thought, The Big Short was really outstanding. But,
it was good. So I think Shawn's favorite is Boiler Room, but I'm not going to quote him on it.
I worked in one of those, so I got it. So how realistic was the Wolf of Wall Street?
That's kind of like the boiler room that Shawn was talking about. They're selling penny stocks, and I'm sure they, I don't know firsthand, obviously, but yeah, it seems like that.
I couldn't watch it personally.
Yeah, it was pretty rough to watch for me personally, but I got through it. Definitely not on my top list of things to watch. So, but
I think it was pretty relative to some friends that I had or coworkers within commodities, so that was pretty fair to their lifestyle. We didn't perform that way. My boss was pretty straight edge when I traded commodities, which I think was good for my long-term healthcare, probably, right? But I had friends that were in that type of an environment where it was like a churn and burn kind of thing. They would get a bunch of money in one day. The owner would just pick a direction, and everybody had to call every client and just tell them to buy gold that day. And it was just either feast or famine. The gold trade made money or it didn't, but the brokerage made tons of money in one day. I mean, some of them were making like, $50,000 to $70,000 in commission in a day. So that's their month. And then the accounts blow up. If you're a broker, you got to call the people again. But, that day, obviously, when they make that money and close shop, the boss is happy and he takes everybody out and they party and do their thing. And then, next week come back to reality, right? So it's definitely how a couple of people I knew were. Doesn't mean it was right, but that's what they did.
yeah.
Was that you, Lee?
Go ahead.
Was that you, Lee?
Yeah, that was Lee.
What did you think of it, Lee?
Yes. I thought it was pretty rough, but it wasn't like margin call or what's the one with Barry? Michael Burry?
Oh, the Big Short.
The Big Short.
Yeah.
It was very different of type of a setting. So I didn't know if it's realistic or not.
Yeah. Well, I think it is real. It is based off a true story. So what they were selling was these like shell company penny stocks, and they would, basically, sell these high commission over the bulletin board garbage, and they'd pump them up, and then, I think he had a few legit things, but most of them were doing those penny stocks they weren't even companies, and Boiler Room, that movie is pretty much, the same as Wolf of Wall Street, but a little more tolerable to watch, as far as the drugs and all that garbage. So.
Hey, did you guys see Arbitrage?
Yeah, I've seen it a while ago.
What did you think about that one?
I don't remember. Was that Richard Gere?
Yeah. Mm-hmm.
Yeah, I just remember him in it. It wasn't. I watched it a while ago. It's hard to. I actually don't even recall much about it at this point. But yeah, Big Short's my favorite. One of my favorites.
Oh, The Big Short's my favorite too.
Yeah.
Yeah.
So.
Hey, Josh, maybe we want to add a movie review segment, going forward.
Yeah, right.
Yeah. It's a good one though. The Big Short. I would definitely recommend that to anyone.
Yeah, I honestly, I thought what set that apart was, from my perspective, it really got into the head and the psychology of professional traders. That's why I loved it so much.
Mm-hmm.
That's what I thought set it apart.
Yeah. The one margin call, that's more focused on like, the Fed actions and, the people in that versus like the traders. Yeah. So the other one was decent. So I'm a kind of, I'm a sucker for any Wall Street type movie. So, okay. I think that's rounds out market update questions. Shawn, you ready?
Yeah, I'm ready.
All right, fire away.
All right, cool. Let me share. So it's going to be, so my thought on the call was going to be, everybody was going to collaborate, share some ideas regarding the trade design, trade setup for Nvidia from last week. So I'm still going to go that route. kind of try to make it a little bit interactive. So please speak up if you have any ideas, suggestions, comments, or whatever. So a couple people, a handful did send in, the pictures or the images of the virtual portfolio and, kind of the construction of the Nvidia trade. So based on the Nvidia being a non-mover, I think it was a non-mover last week, did anybody actually trade that as an iron butterfly trade as presented? Okay. And then did anybody follow? I know a couple people followed it as a double calendar, and I believe a couple people traded it as well as a double calendar. Anybody trade it solely as a double calendar?
I did. I traded the, this is Sudhir. I traded the double calendar live.
Okay, good. Anybody else? I received a couple emails. So anybody else trade it live or just track it within the virtual portfolio? All right, cool. All right, well, I just want to go over it. Yeah, thanks here for sharing. I knew one person did. I knew you did, Sudhir, so I wasn't going to call you out on it, but I was hoping you would speak up. So, feel free to chime in at any point in time. So I really just want to go over, that particular trade relative to, the iron butterfly and also relative to that double calendar as well. So, obviously the earnings season for this Q2 2021 is kind of coming to a close in the impact or in the essence of our actual trade that we have set up. I'm currently working on having the virtual portfolio results for all the different trades that we have set up. So I hope to have it completed, by the end of this week and everything kind of fine tuned, and then everybody will be able to view it next Wednesday. So during our call next Wednesday, I'll be able to share it. We can all, talk about it and kind of go over it. There weren't many trades this particular quarter versus the last, but there's definitely been some new things that have come to light, that I've learned this past quarter that I think I might be able to apply to the next quarter. I've shared them, within these calls, but I'll be going over those sporadically as well. So, based on the Nvidia trade, the good thing is that trade did work out. We had talked about. I'm going to pull up a chart of Nvidia real quick. Give me 1 second. So when I put that trade in, or when we had analyzed it that day prior to the earnings, I think the earnings announcement was on the 18th. So yeah, prior to the close, they were on the 18th. After market close is when the earnings happened. So we talked about that trade prior to the close, and when we did, let me see. So was I not having? I'm looking at different trades. 1 second. Let me see. We have earnings here. Way down here. So we had a split. So this isn't going to be the best chart to show. So I apologize. So here we're having some data. We're having the IT group work on some of this data that we're pulling in, because as we can see, Nvidia actually had a split on the 20th. So that's why we have that drop in price here. And the earnings actually was right here. So not really the best way to show you this on a chart. But anyways, we got into the, I showed that trade last week. So on the 18th prior to the market close, the stock was roughly, you can see on the little chart here from the low to high was 190 to 196. So when we looked at the price, it was around the 194 range when I put the trade in, into Delphian for the call. But then prior to the close, the stock even dropped almost near 190. And we can see based on the pricing here, it went from, the close was around $190.40 and the low was 190. So it dropped pretty substantial there towards the close. So really the trade design that I set up was at the 195, and I even did some of the 192.5 as well as it was dropping, and that was kind of coming closer to the close to get filled on them. So, let me go into the actual virtual portfolio, and I just want to set those trades up for you just to make sure everybody, has an idea how that iron butterfly and that double calendar is set up. So since nobody, excluding Sudhir, answered, why they, if they did do the trade, does anybody mind to speak why they did not want to do the trade, or are these trades just not that, viable to talk about anymore? I'm just trying to get a good grip on everybody's thought on the call. Anyone?
You're talking about the iron butterfly?
Yeah, or either of the trades. You know, you're the one that I know we can go over your differences between picking one versus the other. I think I know the reason, and I don't disagree with it at all. But I want to try to see why. You know, we've done a lot of work on these earnings trades, and in the past we've had some people really follow these trades and enjoy doing them. So I just wanted to try to get a gauge of why people are not doing them, or at least not speaking out. Does anybody
In my
want to
case,
speak
I
to
do
that?
everyone I have time for. As far as the iron butterfly versus the double calendar, you know, I think I was just, you know, I'm just not familiar with the double calendar as much. So, you know, I was just trying it out, and it worked. So, you know, the double calendar is you can get in at a lower debit than you can the iron butterfly, but you know, I still do the iron butterflies. So I have a mix right now.
Right,
Shawn,
and I go ahead.
oh, I was just going to say that I had put the trade on at a price, but I didn't get it. So
Okay.
I knew what the credit was going to be. So the next morning I watched it when it opened, and the first half hour or so, I thought, oh shoot, too bad I didn't get it because I would have made a profit. And then I watched the stock take off, and I would have been deep.
Right.
So I'm
Right.
kind of glad I didn't, because I probably would have waited an hour or two to see what was going to happen. By that time, I would, you know, be on broke even. So I'm glad I kind
Right.
of did. Yeah.
Yeah, and that's fair. I mean, because yeah, you're right. I mean, it was kind of flat and stabilized, and then it actually made a huge rally to like 205, or you know, like you said, well above that range, and then it actually sold back off and kind of came back to normal. But yeah, it was a pretty wild day for sure. So that's fair. Yeah, no worries. I mean, and that happens. We've talked about it. I think, you know, where you set the price, and I don't feel there's really any reason to chase it. You know, you've come up with a price that you're willing to either collect or pay for the trade. And, you know, and these trades are so fast, right? Because you are talking about earnings within the same day. So it's not like a trade that you're looking to hold on for the next, you know, 3 months or 6 months or whatever. So I think it's really imperative on these trades to kind of pick a price, don't get caught up in the moment. And if you don't get filled, you know, move on to the next one, right? So that's a fair.
Yeah, no,
fair response.
I still do these, but you know, I will pick price, and generally I will get filled, but because I was not going to be here at close, I set the price and I said I got to walk away. So
Right.
so generally if I'm sitting here close to 4 o'clock, I might start adjusting the price to make sure I get in, but this time I set a price and had to walk away. So
Okay, fair enough. And that's the iron butterfly. Have you looked at the double calendars at all, or just
no,
not
because
really
I don't
too familiar with them?
understand those. Yeah, I don't understand
Sure.
those. I've got to go back and listen to the previous recordings to understand them.
Mhm.
I did when Dave, I guess, sent out the documentation on them, and I looked at them, and I think I did one, but I don't understand them that well to get in and know when to get out, that sort of thing. So
Gotcha. And that's fair too, right? And I think that's why I'm using this virtual portfolio in a big way, is just to use that as a testing feature to say, you know, what would happen if, then, and what, right? So I can kind of get an idea, because I'm with you. I mean, I know how to execute them, and I know how to put them in and get out of the trade, but I'm still a little bit weary of, you know, a trade that's going to be a $200 debit versus one that might be a $1,400 debit. You know, what's the difference between the two? And Joe's talked a lot about using the Greeks for the analysis, and Joe and I have went over those, and they do provide some really great information on, you know, which one you should trade versus the other, but I still need to do some more analysis in there as well.
Was that discussed on the call anytime? Like, I either do the butterfly or the double calendar now, but you know, I'm not sure if there's a, you know, objective criteria on which one you should do, you know, one versus
Right.
the other, right? I don't
Right,
recall
yeah.
if that was discussed.
No, we haven't discussed that. I think this is something fairly new that, you know, we've started talking about over the past couple of weeks in the limited time that we have. But, you know, I think Joe and I need to get together to come up with a plan, possibly of almost like a mini education on this particular trade setup and trade design. And then, you know, if if it's something that sparks the interest with everyone on the call, then that's something that I definitely don't mind testing for future earnings trades, right? If somebody would rather do that type of trade, you know, versus the iron butterfly, it's definitely something that we could add into the mix of the testing and kind of push forward with that and test it, right? And then say, okay, well, these results definitely show better. Because, you know, I feel like Sudhir mentioned before, and I don't want to speak to what you're saying, what you're thinking, Sudhir, but for myself, you know, on some of those trades like Nvidia, and I'll show you here when I put the trade in, that the risk on the iron butterfly was, let's say, you know, the total risk, theoretical risk is like $700, and then the actual risk on the debit for the trade that we were looking at for the double calendar is 200. So I'm reducing that risk substantially. Now, obviously, with reduced risk typically means reduced profit, and everybody understands that. But you know, I feel that's kind of the takeaway on some of these trades, where if the theoretical risk on the iron butterfly is really high, you might be able to do a double calendar and kind of not have as much risk on the trade and still be able to participate in that vol crush or that, you know, that non-mover type action.
One of the things I've noticed is, and I've done just a, you know, 2 or 3 double calendars, so this is not a large sample size, but I've done a lot of the iron butterflies, and you know, you set your target at 25% for both of them, but the iron butterfly is a credit trade. So, you know, generally, if you set it at 25% and it works, you're going to get out at 25%, you know, right about there, right? That's where it
Right.
triggers. On the double calendar, you set the target at 25%, but when it's like, it moves much faster. So like the Nvidia trade, I set the target at 25%, the target order triggers, but then when it actually gets out a few milliseconds later, I got 48% profit. It just
Right.
moved that fast, even though the target order was set at the 25% price, right? Profit price.
Right.
So there is that difference in, it seems to be in speed. I don't know where that shows up in the Greeks, but just for the handful that I've done, I like both trades, but you know, I noticed that difference, and I don't have a clear criteria in my head on when I would do one versus the other.
Right. Yeah, and I agree. I mean, that setting that profit target on the next day is that variable of what we need to analyze a little bit further. I think if I can use Delphian to kind of put that trade in as a whole and possibly analyze that when I run some back testing on it, just not even with earnings, but with other kind of trade setups, entry and exits, I might be able to get a better feel for where that profit target should be. Because you're right, it seems like it's pretty fast and furious. And a lot of times, you know, when you have 4 legs in there and you can see the value of the total of the 4 legs change pretty dramatically, and we've talked about it, sometimes it's one leg moving and the other leg not really moving, so it's not making that adjustment for the trade, what the trade's really worth. But yeah, it's interesting that you would set it at 25 and they'd fill you at 48, because I know in the past, you know, years past, you know, they would look at that. In my mind, Joe might have a different opinion, but they would look at that and say, all right, well, we're not going to give you 48, you know, we'll give you like 29 or something, and you feel great because you got better. But I just feel, but that's awesome. I think that's really cool that they do that. But yeah, I don't know. I know you asked that, but yeah, I'm not sure the sweet spot on those yet.
Yeah, I was happy to get the extra profit, but you know, I
Right.
was like, wow, that moves fast, because you know, once an order triggers, it's just milliseconds later that it exits. So
Right.
amazing that it moved that fast.
Yeah, usually when I get those better fills, I'm waiting for them to come back and like give me a correction. Oh, sorry, we're correcting you on these prices, and you're like, seriously, that seems about right. But I don't think they do that much anymore either. All right, any other comments, guys? Anybody want to speak up? I mean, I appreciate you guys, and I think everybody watches them and uses them, you know, and kind of tracks them, which is great. But you know, I just want to make sure that, you know, I'm not kind of talking in a direction where nobody's really listening. So you know, I think they're both great trade setups, and I need to do some more back testing on the double calendar. But again, I just want to show that Nvidia one, because not obviously because it worked, but it did work, which is great to end kind of their earnings on that one. But let me just put it in here. So my platform reset. So if you are in, it probably reset for you as well, so you have to log back in. But let me go back to the 18th, because the earnings did come out on the 18th. So to add the position, I'm just going to click add the position, type in Nvidia. And then I'm going to put in the Iron Butterfly first. I have to look back to even see if I actually traded the Iron Butterfly personally as well. I think I might have just did the double calendar. So Iron Butterfly, I just set up a portfolio for today's meeting. You can see the portfolio name is as such. So on the 17th, go ahead. Somebody want to say something?
Is there a reason to choose the Iron Butterfly versus the Long Call Butterfly?
I was going to show them both. Well, I mean, the long call butterfly is going to be a directional, right? So if you do a long call butterfly, it should be a directional type trade. So this is going to be the directional type trade. We've talked about this one before. You know, it's an interesting trade setup because a lot of people in the industry do talk about it because you can really get some great reward off of this type of trade. But let me just show you the setup on this type of trade real quick. So a long call butterfly, you're buying one, you know, out of the money call, right? Or excuse me, you're buying typically you're buying one in the money call. You're selling two, I guess you would say maybe at the money calls, and then you're buying another call further out of the money for protection. That's how I look at this trade, because really when you're doing a bull call spread, you're buying one call, you're selling another further out of the money call. And if the price goes above the call that you sold, you're really offsetting, right? Because you bought one, you sold one, so those two are offsetting. In this scenario, if you're buying one and selling two, basically once you go above the calls that you sold, you're break even on the one you bought and the one you sold, but you still have one net short there. So as the market is, as that stock is ticking up higher, you're losing that money on that call that you sold. So to avoid that type of exposure in this long call butterfly trade, you're actually buying one further out to protect you. So in this sense, as it moves above the two that you sold, you're basically giving one back, if you want to look at it that way, all the way up to the one that you sold. And then essentially anything above, or excuse me, the further one that you bought, anything above that, you're break even on the trade. You know, if you pay, not break even, actually, I think you're at max loss, right? Because you're typically paying a debit for these types of trades. Let me show you an example real quick, and you can kind of look at it. So typically what I've known people to do when they do a trade like this is they pick a price point to where they think the stock will go, you know, by the expiration of these particular options. So let's say you just said, hey, Shawn, I think the stock's going to go to 200 when these options expire. So what you would do is you would maybe buy a 190 call. You would sell two 200 calls because that's your sweet spot. If the stocks stop trading at 200 expiration, that's your sweet spot of the trade. And then you would do this at 210. So you can see I have a $10 spread here and a $10 spread here. So no matter what, my max loss on this trade is 215, which is the debit that I pay for the trade. And then my max profit is just like it would be as a normal bull call spread. You know, the difference between the 190 and 200 minus the debit that I pay. But if it keeps one above 200, you know, I'm going to start giving some of this money back, as you can see within the chart below. Does that kind of make sense for the long call butterfly is?
Okay.
Yeah or no?
Somewhat.
Somewhat. Yeah, it's I mean, I'd have to give you a little bit more of a detailed explanation on it, but you know, a lot of people talk about these really in a great way because, you know, I don't know, what did the stock close at? What did Nvidia close at on that following Friday? So on the, let me just look real quick. So on the 20th, so Nvidia closed on the 20th, it closed around 208. So that's where you would, you know, if you wanted to set something up like that, you would say, you know, I've seen people do this where they would say, maybe they're going to buy a 200. So it closed at 208 on that Friday, let's say. So if I bought a 200, I sold two of the 210s, and I did the 220 to cover me. We can see that I'm getting basically, look at my debit versus the amount of money that I can make on this trade. I paid $84 for this trade, but I can make $916. That $916 profit is made if the stock closes right at, 210, essentially I think it's at 210 at expiration. So I had to pretty much pick the exact spot it's going to expire in 3 days from when I put this trade on the 18th to when the options expire on the 20th. So it's a really cheap way to do the trade and essentially be almost in a bull call spread, with kind of protection to the upside. So you can see the trade here versus if you did a bull call spread, the net debit would be substantially different. So here, $84 to get into a trade like that. If you looked at like a bull call spread, where's the bull call? Same trade setup. What I do? 190 and a 200, excuse me, and a 210. 200 and a 210. Oh, sorry. So in this setup here, my debit's not much more in theory. So $106 versus $84. Usually there's a greater difference between the two. There's not that much difference between this one, which is interesting. But
Shawn?
typically yes.
I was just going to say, so you're making the expiration the current week, even though it's a debit spread. You're not going out. And I mean, the 20th was, what was that? Thursday, Friday?
Yeah, right. This is a Wednesday trade and this is a Friday expiration. No, this is really just to answer what the long call butterfly trade is. So I'm sorry to confuse everybody. Russell.
No, that wasn't
Russell's
confusing. I was just wanting to make sure that you would keep that kind of trade in the current week and not go out that extra week like you do sometimes. Because right now,
typically on those, go ahead.
Yeah, because right now Nvidia is trading at 223. So it would have blown past that and you would have lost money if you'd gone out to this week's expiration.
Right. Yeah, I typically don't trade these long call butterflies, but it was just interesting that he asked about that because somebody had mentioned that the other day on a different call I was listening to, and they had mentioned just that same example of like, hey, I can pay $84 for this trade and I have the potential to make 10 times my money in a couple of days, and they are correct. You do have that potential. But, on average, how often can you pick the exact price that Nvidia is going to close at, on Friday, 3 days later, right? It's pretty, I would say, impossible, right?
Yeah.
I mean, chartists or technicians might be able to kind of get a good idea, and those trade designs are interesting because you can pay little money to do that. But I just think the probability of success on those is somewhat limited, right? I could probably count on my one hand how many times I've done a trade like that. And that's how I do it. And I don't know if that's right or wrong. Anybody else can chime in. But I would see something maybe on a Thursday with some options that are expiring on Friday. And I would just want to, say, lack of a better word, take a gamble for where that stock's going to close on, that Friday. And then that's where I'm setting up, this type of trade.
That. Well, I do that on the iron butterflies, but I don't know anything about this long call butterfly either. So I was just asking because I've never really tried one. But iron butterfly, sometimes you go out that extra week if you have if you're putting it on like on a Wednesday. So in this case, you wouldn't have wanted to long call butterfly. I don't trade them, so I don't know anything about them either.
Yeah.
This
So
is something
it's pretty.
I noticed. Yeah.
I've noticed if you did the long call butterfly or the iron butterfly, the cost, the risk and the profit's almost the same. If you use the same expiration dates and strike prices.
The
risk is the same.
Yep.
No.
It's off.
So if you're doing the long.
Yeah, when I did it, it was like off like $2 or something like that, but it was pretty close.
Because if you're doing the long call butterfly, you're definitely picking a direction because it's a debit. So you're picking a direction that you want the stock to go up in the long call butterfly, but you don't want it to go up too high, right? So in this scenario here, you want the stock to go from, let's say it's at 190. You want it to go as close to 210 as possible, but you don't want it to go above 220 because above 220, you're basically breaking, you're losing what you pay for the trade. Not breaking even, I'm sorry. So really, the sweet spot, as you can see here, is in between, roughly in between 201 and 219. anything below 201 or anything above 219, you lost your 84 bucks times how many ever you did. So long call butterfly, you're definitely bullish, just not too bullish.
Interesting.
So it's interesting.
It is interesting.
Yeah. So one scenario like that I would, really you can't test it in Delphian, so I really hate to kind of give that information out, right? But one scenario like that would be, like for Nvidia. So Nvidia has earnings come out, the earnings spikes up to 205 or 210, and then it pulls back really hard. And then you're like, wow, they really wanted to test that area. Maybe they'll test it again. I don't know. But you could say, all right, well, let me do a long call butterfly like this to see if it does want to test that 205 area again. And if it does, maybe I might get lucky and I could, get the stock to close at 205 on expiration. And you can see I'm paying $36 to essentially take that gamble that the stock will close at 205 in 2 days. So, in my mind, that's just a gamble because you're saying, hey, it's going to close somewhere between, 201 and 209 over the next 2 days, right? And it's just like, well, okay. I mean, you could look at a chart again and try to pick maybe some Fibonacci areas and things like that to kind of come up with an idea of where it might close and the price it might close in between. But that's a very hard task, I think. And I would much rather be able to put these trade setups in Delphian and have a specific, numbers to what I'm thinking. And then that will just say, okay, that seems a lot better than just kind of picking or taking a gamble, because you can see with this one, right? I don't know what the probability of profit is, which isn't super bad. Probability of profit 54%. I would have thought it was going to be way lower than that. But, that might be something that we might want to look at later too. So yeah, so sorry that was a little bit of a tangent, but somebody did speak about that trade setup the other day on a call. So it's interesting because they do talk about, hey, I made 5 times my money, and I bought the trade for 36 and I got out for, whatever, a couple $100. And, that's great. But how many times do you have to do that to actually show a profit over the course of, 100 trades? Probably have to do you have to do 100 to probably win like a couple, in my opinion. So anyways, sorry about that. Any questions, comments on that? Anybody have personal experience with long call butterflies? All right. So again, 8/18, we were looking at the 27th. So why didn't it come up with that? Let's see. Get my price for some reason. Let's see. Okay, here we go. So Nvidia, let me go back to 8/18. All right, so now 8/27. So 190 is where it closed at. But again, when we were looking at it, lucky enough, 192.5, 195 is really what we were looking at. And the reason I say lucky enough is because the stock pretty much sold off to 190, and then the next day it did spike up like $5. So it was right at 195 on the next day's open. So just happened to be fairly lucky in that instance. So I typically just round up on mine. So if we're looking at 195, I'm going to add $15. So $15 to 195 is a 210, and then a 180. And then we can see that the credit, we're looking at basically getting a credit on this trade. So you get a credit of about 945. This is for option settlement. So we're talking about the options settling, or closing at 190. And these are the prices that we're getting. So it's going to be a little bit different if we did the trade, again, 20 minutes prior to the close. But let's look at it this way. So we can see I'm getting a $945 credit. And then my max risk, is $15, so $1,500. So therefore, my risk is 555. So my credit minus the total risk, 555. So if I hit create, we'll see the position create into the virtual. And again, the stock, sold off to 190, opened up the next day pretty fair around the 195 range, and then it did have a pretty wild ride throughout the day, as we already spoke about. So if I go forward one day to 819, we can see I had a bit of a profit on the trade. I mean, I was up $120 or so the next day prior to the close. But, as we all know, it did open up and it was a bit better intraday, so happened to be. If we go another day forward, we can see we started giving some of the money back. And if we keep going another day forward, obviously we're giving more money back. And as it was mentioned, Nvidia was around the 190 to 195 range the day after the earnings. And I think it went up to 205, but came back down. But, now we're sitting at 223. So as that stock is progressively moving higher, so is this trade progressively giving money back. So that first day was a very crucial day on the exit for that particular trade. So we had, I had the double calendar in there as well. So I want to just kind of show everybody that trade setup again. Again, I'm working with the IT team to see if we can get it added in. So it'll just be one trade selection within the virtual portfolio or within Delphian, but we don't have it there yet. So we have to do a long call calendar spread, and then we have to do a long put calendar spread and look at those trade setups together. So the long call calendar spread is going to be essentially that you're selling that week's expiration because that's where most of the implied volatility is for the options. And then you're buying the next week's expiration for protection, essentially. So if we look at that and do it this way, I'm going to sell the 20th, and I'm going to buy the 27th, and then I'm going to do the same. So 195 again is where it was at whenever we were looking at it. So that's the trade that I wanted to put in there. 121 bucks is going to be the risk on that particular trade. We hit create. And then I'm going to do the same thing for the long put calendar spread now. Now, Sudhir had done something interesting that I hadn't thought about before that I also need to test, and is basically looking at buying. So if the earnings is maybe on the 19th, can everybody see my calendar, or is it only me that can see that?
We can see it.
Okay, cool. So if the earnings was on the 19th or the 20th, Sudhir had looked at not selling this week's expiration, but selling the 27th expiration and then buying the options on the 3rd. So it kind of pushes it out a little bit further, and you kind of avoid that risk of being exercised as well, because you're not selling an option that's going to be in the money the very next day at expiration, and you get exercised. So I had tested that, but I think I traded it and it worked, and I think Sudhir traded it before and it worked as well. So just another kind of way to change the expirations of those options and see a different outcome. And again, I haven't tested that one within Delphian, but I need to do that also. Any comments on that, Sudhir? You don't have to.
No, it works for me. So, but I haven't done a large number of them, but yeah, it is working.
Right. Yeah, and it seems that just like that exercise or that assignment risk, it kind of takes the assignment risk out, moves it out a little bit further. And I did compare the deltas. So I compared the deltas, meaning, as the stock price moves up or moves down, how much does my trade, move up or move down in dollar value? And it really didn't have that big of a significance between this week's expiration and next week's expiration, and kind of moving them out another week. The difference in value seemed to be pretty much in line as you went out. So it was pretty interesting. Obviously, the implied volatility is going to be the main factor there. The implied volatility of the options that expire this week is definitely going to be greater than the implied volatility of the options for next week, just because you do have earnings this week. But as far as when delta is relative in that scenario, it didn't change that much. So this one is doing the same, but doing the put side. So again, selling the 20th, 195, buying the 27th, 195s. These are both puts because we're doing the put calendar spread. Hit create. We can see the total debit for the trade. So you can see that the total debit for the trade, when I add both of them up, is roughly $80. So 201 plus 6, so like 207 bucks. And that's about roughly what it was when I did the trade live as well. I think I paid anywhere from like 200 to 215 or so. Am I going to say something? All right, no problem. So, same scenario. If I move forward one day, and this is again closing prices, we can see that, the value of both of these trades went up substantially, right? 86, this side went from 86 to 149. This side, 121 to 124. So 121 to 124 didn't go up too much, but, the stock did rally to the 195 and even went a little bit higher. So you got a little more value on that put side. So those put, the 195 puts for that week's expiration, most likely lost more value. I have to run some analysis on that one as well, but you can kind of see the setup for this particular trade there as well, and kind of what happened the very next day. So, and then what was mentioned before, if we keep going ahead in time, we'll be able to see the value of this trade, I believe, go down. One more day and the options are going to expire. But, the trade did keep going up in value. So I think it did spike up another bit on the very next day as well. So, kind of choppy explanation of that. We did talk about the long call butterfly, but the iron butterfly versus the, the calendar, the double calendar spread. Any comments or questions or thoughts or anything anybody wants to add to that? Okay, no problem. So yeah, what I'm going to do is I'm going to work with Joe and see if we can come up with some type of bit of an education for this, double calendar spread. But, can I get a sense of if I do add that into some of the testing for some of our earnings trades, is that type of trade design a debit, but possibly lower risk type trade? Would that be more valuable than the iron butterfly? We are still talking about 4 legs. So is one more valuable to you guys than the other, or can I get somebody's comments on that?
I like it since it's a lower risk.
Yeah.
I
I found it pretty easy.
But yeah, I'm warm. The lower risk of the double calendar is very appealing.
Yeah. Okay. Yeah, and it's something that I will test. So I'll try to run the test on, let's say, run a test on all of the ones for the iron butterfly, and then run a similar test using the same exact parameters, but using this trade setup, and just see, then we'll be able to look at them side by side and say, here's the analysis of each of these trades side by side, and how are they reacting, and what's happening with the trade, and go from there. And then even look at it deeper than that as well, meaning, if you're doing the double calendar and it's costing you $1,000, you got to be prepared to drop almost probably, $800 in a day. And that's just a hard pill to swallow. So having, those numbers in front of us, I think would be huge to help us out, make those decisions. So.
Agree.
So, but yeah, and again, I mean, I really like the iron butterflies. I'm just always trying to find, just trade setups or different trades that we can look at that, might be an interesting way. And then again, to trade. And then Dave's not on the call, but the Nvidia might have been a perfect trade to be able to scale out or get out of, one side of the trade and then let the other side run, right? Because if we had some, if I had these these August 27, 195 calls still in my account, the stock's at what, 223 right now. So those calls would be, $28 in the money. So that's $2,800 right there on that particular side of the trade, just in the value of that one option, as it sits right now, not including a couple days more worth of time that you have on the option. So interesting that, I don't know how to roll it, so I can't be educated enough to tell you guys how I would do that or how anybody else should do that. But, it's interesting to look at if you were able to do that, then maybe you could pull some more money out of the trade. I don't know. I just don't know if there's a way to know that, or if that would just be, kind of the luck of the draw, right? But cool. So as far as the earnings, the bullish pre-runners, the runners, the vol crush trades, things like that, again, I'll have all those results next week, and then we're going to start working on the Q3 ones as well. But what's everybody's consensus on those trades? That's a lot of work that, we do put in to put those trade ideas out there. But, does everybody find those pretty valuable and using them and being able to following them? Or, what's everybody's thoughts on those earnings trades that we put out?
Shawn, one question going back to the long call. If you put a 25%, I mean, you could see it one day it's at 102%. So how do you,
right?
I mean, do you put the 25% and what's going to really happen? It's going to.
Yeah, well, this one's not, I mean, yeah, I mean, I put, like Sudhir mentioned, I mean, I kind of let the trade open up, see where it's at, and then I put the trade in, just to make sure I can get that 25%. I don't want to be too aggressive with it because I'm not 100% certain on how far I can let that trade go. But I know there's a certain time during the day when supposedly when you can make more money by getting out of that trade. I just don't know when it is. But so yeah, that's go ahead.
Do you put the 25% on both of them, I guess, it's rather than?
Well, Yeah, I was putting it on the entire trade. So I put basically the 25% on the entire trade. So when the next day, mine didn't trade. I think it traded up as high as like what I'd seen was around $300. I paid around 205 for it, and I'd seen it come through at about $3. So yeah, when I put mine in there, I put it just to get out at 250. And kind of like Sudhir had said, it does move around so much during that opening time frame within the market that it was really hard to get a grip on where that sweet spot would be. So, I just said, okay, 25% is what I told Sudhir and everybody on the call, and that's where I'm putting the trade. And I think, like Sudhir, they filled me better, which I was surprised. But yeah, I'm just not sure exactly of when that perfect timing is and when that perfect percentage is. And if I can get 25% consistently on trades, I'm doing good. I can always make more money. I think it's just I think that's where that testing is going to come in for some of these trades.
Okay.
But you're right. I mean, you look at $200 what you paid, and then you're looking at value afterwards, 475 or 480. And remember, this is on the close too, and I think I was probably out of the trade by like 10:30. And then like somebody else had mentioned, I mean, it went up to 205. So at 205, I would have been quite concerned with my trade at that point in time. So I would have probably been freaking out. So I'm glad I didn't hold it that long.
So do you put the 25?
Came back at.
So you
Go
put
ahead.
the 25% on the cost?
On the cost, yeah. So I had it in at 250. So if I paid 200, I had it in at 250 to get out. And I think I got filled at like like Sudhir said, I think I got filled at like 290, somewhere around there. So I got filled, almost 50%, around probably that 45% or something like that. So they filled me better.
Well, actually,
these are, and again,
those are two positions.
Go ahead. Well, they have it as two positions.
I think
here.
What's confusing is there are two positions in the Delphian virtual portfolio. But
right.
On a trading platform like Thinkorswim, and I don't know which one you use, you can put a 25% target on the overall, all four legs. You
Correct.
follow what I'm saying?
Yes.
So when I trade them live, the iron butterfly or the double calendar, in a trading platform like Thinkorswim, the target, they look at the cost of all four legs, and you do 25%. It's a debit, so 1.25 times your debit, and it's done on all four legs combined.
Okay, I kind of use.
It looks different in the Delphian virtual portfolio as two different positions, but in the trading platform, it's one position.
Well, I kind of use
right.
trade. Well, I kind of use trade here, so I guess it's going to look like this versus what you're seeing in Thinkorswim.
Yeah, I have to look to see how. Yeah, I have to look to see how, if I add this into Tradier, how that looks. But in Tradier, you can put in four legs. So I did both of these trades. I did the double calendar, but I did the 195, and then I also did the 192.50. So I did two separate double calendar trades using two separate strikes. But I did both of those trades in Tradier's platform, and I got out of them within Tradier's platform as well. I didn't connect them. I thought I connected them to my Delphian platform, but I don't have it connected. But you're able to do that trade within Tradier. And when you set it up and you say you want to do those four legs in Tradier, so once I was filled, I just went in there and clicked all four different legs, or the four legs that apply to that one particular trade, and I hit close position. It adds it as one entire trade, and then I got into the trade at a $2 debit, and I just said I want to get out at a $2.50 credit, and then submit it, and it submits it as one trade. So yeah, might be a little confusing because it does show up as two separate trade entries, but in Tradier it will do it as one complete trade. But like you're saying, Russ, I'm not sure. I got to look to see if you have this set up within Delphian, how would this look? This would probably look as two separate trades in Tradier as well. I gotta get the Rational Morse Indeed to test that and see. Because yeah, I'm not sure. Because if you set it up this way, I would think it would send it over as two separate trades, right? But I went into Tradier I just logged into my Tradier account and just did it within Tradier that way. So if you want me to show you sometime on that too, I can show you that as well within Tradier.
Okay.
So yeah, I just got into it as a debit, $2 or whatever. It was like 210, and it filled me at 208 or something. And then I just had 250 as my credit. I think it filled me at like 280 something. I went to look it up, but you know, I did two separate. I did the 192 50s and the 195s. I had both entries and exits. And then, as you know, within Tradier, you just type in Nvidia, and it pulls up all of the trades for those particular options. So it was more of a mess than I wanted to try to coordinate prior to this call. So I was like, all right, well, I'll but I can talk to you offline about that too if you want me to show you some of those samples from what I did.
Okay, thank you.
Yeah, no worries. So yeah, so stay tuned. I'll do some testing coming up, but in the other, again, the earnings stuff that we're doing, I hope everybody's using it and taking advantage of that information that we're providing. I know, a couple people are definitely doing it, but I want to make sure the other people that are quiet, even if you're not trading it live, just that you're following it within our virtual portfolio or within another virtual portfolio, because, I think these trades are a really good asset to my trading, and I enjoy doing those trades. I would probably do them, test them myself as well, even if I didn't test them to put them out for the group and all of our users. But, I just want to make sure that we are using those and everybody, is watching them, at least kind of following them as much as you can. I know everybody's busy, but, please do that, because we do take a lot of time to put those together. So no questions for me. I'll pass it over to Josh, and it's always open to, email me or touch base with me if you have any questions on any of this stuff or want to look at some of these trades. But I'll plan on doing the testing on the double calendars and have those virtual portfolio results for the earnings stuff from this quarter for you guys next Wednesday. So thanks, guys.
Yeah, thanks, Shawn. Yeah, I think the key is, for the comparison is risk reward, right? I mean, are you getting better risk reward using the double calendar or not? So I think that's the big key. And, maybe it's just used for access to those like Teslas, those really expensive ones, so you can get into those trades. So I don't know, a lot of analysis to do on that, and we'll get back to you guys on that. And, we'll have the earnings. Shawn will go through all the earnings returns, and we'll compare, the previous quarters and stuff like that next week. And then the week after that, we'll do the studies update on the 8th. And then the week after that, we'll have the new earnings plan. So keep us on the calendar here. So thank you all, and have a great day. Thank you for attending.
Thank you. Good meeting.